afternoon, everyone. My name is Deandra Coleman, and I'm with the Virginia SBDC Network. For those of you that are not familiar with our organization, the Virginia SBDC is a partnership program between the U.S. Small Business Administration, George Mason University, and local host institutions throughout Virginia. With 27 locations across the Commonwealth, we provide training and technical assistance to small businesses in their local communities. Our one-on-one consulting services are available at no charge. Today's webinar, Future-Proofing Your Business with Blockchain, is presented by the Virginia SBDC. Be sure to check out our other digital webinars, including Securing Your WordPress website tomorrow at 12 and Success Through E-commerce on July 22nd. A few things regarding today's presentation. We are recording the session and it will be posted on our website. Due to the large number of participants, everyone's microphone is muted. But if you have questions during the presentation, you can type those into the Q&A box. We have also enabled the live transcript function, which you can enable or disable via your meeting controls. If you have trouble with that, you can go ahead and send a message to us. And now it is my pleasure to introduce our presenter for today's session. Cameron has over 18 years of experience in technology and as a senior tech consultant in Silicon Valley, where he helped Fortune 500 companies improve their digital marketing and e-commerce. He is founder of the Blockchain Leadership Council and has also founded several tech companies, including a cryptocurrency for use by the nonprofit sector. Cameron is accomplished in language, culture, has an MBA and MA, and believes new technology products have the ability to help shape our world for the better. Cameron is now working with the Virginia SBDC as Chief Digital Advisor, and we are fortunate enough to have him share his expertise with us. We also have two blockchain experts today joining for our session. Beth Waller, who is a Cybersecurity and Data Privacy Practice Chair with Woods Rogers Attorney at Law, and Dr. Feras Klenk, who is a blockchain researcher and adjunct professor at the University of North Carolina. Beth and Dr. Feras, if you want to go ahead and just give a little brief introduction on yourselves, and then we'll get started.
Okay. Who wants to
Yeah, I know. Now we're going to have the standoff as to who goes first. Dr. Klenk, you go first.
Okay, I'll go first. Thank you for the introduction. Dr. Feras Klenk. I am currently a design researcher at Key Medium, where I have conducted a variety of user research studies related to cryptocurrency. So let's keep it simple.
And my name is Beth Waller. As was shared briefly in my introduction, I'm the chair of the Cybersecurity Data Privacy Practice at Woods Rogers. And in my capacity as a technology-facing lawyer, I encounter blockchain on the regular, right? So Cameron had asked me to share a little bit about what I'm seeing and what the law firm is seeing generally. We assist clients, especially emerging technology growth companies who are utilizing blockchain in terms of building it into apps, right? Or utilizing it for various purposes in that way. Also, the law is continuing to expand and grow in its own right in terms of looking at blockchain and distributed ledgers and how they get utilized into the kind of general framework of the law. So we're starting to see clients who want to use, for instance, stock ledgers or minute books that are based on blockchain technology, right? And so, that's one arena that is starting to percolate. And then, of course, in addition, we're seeing some clients requesting to pay using various cryptocurrencies, right? And so there's some ethical components to that in the law, and I think that's a particularly interesting component for lawyers to consider. So just a little taste of what I'm seeing, and I look forward to interacting with Cameron and the other panelists as we proceed today and talk a little bit about future-proofing your business.
Great. Well, I'm excited. We've got great panelists here. We've got a good presentation. We're looking forward to your questions at the end. So let's just jump right in and get started. We're going to be covering 5 main topics in the presentation today. And keep in mind that your questions don't have to be limited to these topics at all. If you have any questions about applying blockchain to your small business or startup, please ask those at the end. We're going to be covering, first off, what is blockchain? Just giving a high-level overview because people in this meeting have a wide variety of background when it comes to this topic. So we're going to make sure everybody has the same basic foundation. Then we're going to talk about how blockchain is used for small businesses. What are the different ways you can utilize it? It's not just limited to accepting Bitcoin payment or initiating or implementing smart contracts. There's other ways, and we're going to talk about those. I'm going to look towards the future a little bit in my crystal ball and try to see, well, what does the future hold? In 3 to 5 years, how is blockchain going to be used across businesses? We're going to look at different industry applications. And finally, I'm going to talk a little bit about safety and privacy concerns around cryptocurrency and blockchain. So first, what is blockchain? There's a lot of words that are tossed around that are related to this term, and these are just some of the biggest ones. Blockchain is essentially all of these things. Blockchain is a cryptocurrency. Cryptocurrency is built on the blockchain. Blockchain uses cryptography. You know, it is digital. You can do transactions with blockchain. It's decentralized. It's listed in chronological order in the ledger. So you might have come across these different words and you might not be sure how they all relate to blockchain. We're going to be demystifying some of that today. There's obviously a whole lot to go into, right? Blockchain has many, many elements. I think one good way to think about blockchain is like the operating system. So maybe you're a Windows user or a Mac user. Well, blockchain would be like the operating system. And on top of that technology, you can build different things. Bitcoin is one thing you can build on the blockchain, but it's obviously not the only one. Smart contracts can be built on the blockchain and many, many other things. I get asked a lot when talking to small businesses, what's the difference between Bitcoin and blockchain? So I think it's worth going through that here. Bitcoin is simply a cryptocurrency, whereas blockchain, like mentioned, is more of an operating system that relies on a ledger as its main functioning, way of functioning. Bitcoin's main aim is to simplify and increase the speed of transactions, like transferring money, without government restriction. Certainly not as restrictive as traditional fiat currencies. Bitcoin can cross borders very quickly with very little oversight. Blockchain, its aim is to provide a low-cost, safe, and secure environment for any kind of peer-to-peer transaction, whether or not you're transferring money to somebody for a good or service purchase, or you're trying to conduct some other kind of business. Maybe you are buying a deed to property. There's many things that can be done on a peer-to-peer basis on the blockchain. Bitcoin is limited in its function to acting as a currency or a vehicle of speculation for those who invest in it, whereas blockchain can easily transfer anything that's digital, from things like currency to property rights, stocks. Pretty much anything that you can digitalize can be bought, sold, traded on the blockchain. So the scope of Bitcoin is quite limited, as we've seen, but the scope of blockchain is more open to changes. You can develop your own program on the blockchain. You can launch your own cryptocurrency. And so it has the backing of many top companies who are using this technology. Just a couple, IBM is using it internally. A lot of logistics companies, FedEx and UPS, are using it as they track shipments. Even the food industry is using it to track the source, the origin, and destination of fresh produce. So there's many, many different types of applications for blockchain. And hopefully throughout this presentation, you're going to think of a couple that can be applied to your business. That's really the goal here, is how can your business use blockchain? So first, let's go over some blockchain basics. So like you saw on that word cloud, blockchain is complicated. And so there's a lot on this slide, but I think it's all very important. So blockchain was first proposed as a research project back in 1991, but it didn't really become famous until the advent of Bitcoin later on, and really in the last 5 years when Bitcoin exploded in value and was in the news a lot. In essence, blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. And blockchain applications like Bitcoin do not exist in a physical form. They exist only on the internet in the immutable blockchain. So here's 6 main features of blockchain. There are other features, but these are the 6 most important ones in my opinion. First, it cannot be corrupted. Every node, and a node, just keep in mind, is basically a computer or a server. So every node on the network for the blockchain has a copy of the digital ledger, and every node is needed to check its validity. It's a decentralized technology. Because it's a decentralized network, it doesn't have any governing authority or single person in charge. For example, if you look at the banking sector, you have the Federal Reserve, you have various big banks, you have lots of small banks. They all are middlemen, essentially, in the transmit of value. Whereas blockchain is decentralized, it does not have any authority like that. Decisions are made by the majority of the nodes in real time. It has improved security because there's no central authority, means no one can simply change the data for their benefit. So it's harder to cheat the system. It uses a distributed ledger technology. And the ledger on the blockchain network is maintained by all the nodes, and it provides transparency and traceability to all the transactions. And so we'll see in a minute here how Bitcoin works. Every transaction on Bitcoin is public, it's just anonymous. So this is the power of the distributed ledger technology. Next, the blockchain runs on a consensus algorithm to enable the network to record data. So this is where a lot of people who are not into cryptography get a bit lost, because cryptography runs the blockchain. Cryptography runs the algorithms that validate transactions. So it's all based on math, and it's all open source, and you can go in and look at how the cryptography is running if you're into that kind of thing. So changes entered into the ledger, for example, Bitcoin, have to be approved by the majority of the nodes. That's coded into the algorithm, and that ensures that everything is kept running the way it should be and nobody cheats the system. And lastly, a big benefit of blockchain is its time and cost savings, because blockchain offers faster and cheaper transfers of value than the traditional banking system and anywhere in the world. Main reason for this is, if you think about all the banks and financial institutions that help you transfer money, there are lots of overhead fees. There's people, there's buildings, and blockchain doesn't have any of that. So because you can take out the trusted middlemen, blockchain offers you many cost savings over the traditional methods. So hopefully you're still with us, and I want to walk through an example of a typical blockchain transaction. In this case, it's going to be a use of Bitcoin. In step one, a new transaction is entered. So this could be, you're looking at a website, you're buying a Tesla with Bitcoin. Famously, Tesla was allowing purchases of their cars with Bitcoin, and then Elon Musk said no a couple months ago, and he's kind of on the fence about that. But let's just say hypothetically, you're going to buy something like a Tesla. You enter the transaction on their website. So you click complete purchase. The transaction is submitted to a network of the peer-to-peer computers. These are the nodes that can be scattered all around the world. This network of computers solves the equation in the algorithm to confirm the validity of the transaction. Once that is confirmed to be legitimate, they are clustered together into blocks. And once there's enough blocks to make it worthwhile, these blocks are put together and uploaded into the blockchain, which is a permanent record. So these transactions are all permanent. You can see the first transaction of Bitcoin from its history all the way up until the most recent. And after that, the transaction is complete. So Bitcoin it's live, and it is happening every second. This website called blockchain.com is showing us the actual up to the second transaction of Bitcoin in the world. It's pretty interesting to watch. You can see the values, the timestamp, and the hash. So these hashes represent individual transactions, or most likely individual people holding a cryptocurrency wallet. Some of these transactions are quite small, a couple $20, others, here's $10 million. So they vary a lot, and they're happening all the time. Now, this is the public nature of the blockchain. The only thing is these are anonymous numbers. They're not associated with somebody's name. But if you want to share your purchase history with somebody else, you can give them your hash, and I'll click on this person. These are all the transactions that this hash has ever done with Bitcoin. So it gives you a lot of insight into the happenings of the blockchain network. Now, whether or not you're looking at Bitcoin transactions or any other type of transactions happening on the blockchain, they will be visible in a method very much like this. It's all publicly available. So now that we have a general overview of blockchain that I hope made sense, we're going to talk about 4 main ways that blockchain is used for small businesses. Firstly, I get asked a lot, how can I integrate Bitcoin or other cryptocurrencies as a form of payment? And we're going to talk about that. Secondly, we're going to talk about smart contracts, which personally I think are very exciting. A lot of people in the blockchain world think smart contracts might be blockchain's killer feature or killer app, that it was what makes it explode in popularity beyond Bitcoin. These are self-verifying and self-enforcing contracts. They're stored within the blockchain ledger, and the contract is recorded in a way that can't be changed or manipulated. And some examples could be commercial leases, agreements with vendors, and even employee contracts. Next, we're going to talk about how blockchain can be used for raising of capital. So instead of seeking angel investment or an IPO, initial public offering, these are alternative methods to go around traditional banks and lenders and private equity firms, where startups and small businesses are successfully raising money for their business. And they're called, in general, blockchain-based capital offerings, or BBOs. And finally, we'll talk more about how do you bring new customers to small businesses. Potential customers who might have savings in cryptocurrency are looking for ways to spend it. And there's some interesting research around this, which I'll show. So accepting Bitcoin can give an advantage in acquiring new customers. And some large e-commerce outfits like Overstock and Expedia, and like I mentioned, even Tesla at a time, accepted Bitcoin. So let's dive into number 1. Why would you want to integrate taking cryptocurrencies as a cheaper form of payment? Mainly because of the cost. So the cost of accepting traditional payments are on the left. Square charges 2.6% and a transaction fee. PayPal is even more expensive. However, the cost of accepting payments over the blockchain, for example, with Bitcoin or Ethereum or some of the other major cryptocurrencies, the BitPay allows you to integrate that kind of payment method onto your website or your e-commerce page with payment buttons, and they integrate with Shopify and QuickBooks. They charge 1% transaction fee. So already you're going to save significant money. Coinbase just launched a new product, which I've tested, and it is really quite amazing. They offer hosted checkout pages and payment buttons and invoicing integrations with WooCommerce and Shopify. And they charge a 0% transaction fee. So essentially what you're looking at is, instead of losing 3% by taking US dollars, you're losing very close to 0% by taking Bitcoin or Ethereum or another cryptocurrency. And I think a lot of small businesses would really benefit from having that as an option. The second major use case for blockchain are smart contracts. And as I talked about, organizations are leveraging this blockchain technology to remove the need of trusted middlemen or intermediaries, such as administrators or evaluators. And smart contracts is a piece of code that you would develop to run on the blockchain, where you set predefined rules beforehand. And when the rules are met, the agreement is completed and automatically executed or enforced. Smart contracts work best with any digital assets, but can also be used with physical goods. Smart contracts aren't legal contracts, but can become legal contracts when certain legal standards and codes are applied to them. So some of the benefits are reduced speed and cost of negotiation, enforcement, and evaluation, higher levels of transparency. As we saw, everything in a smart contract will also be visible on the public ledger, and minimization of any third-party involvement, such as banks or even in some cases legal firms. One example of a smart contract that I want to get into more is that a couple of years ago, Dole, Pineapple, and some of the major fruit-growing companies in the world utilized the smart contracts to track shipments of foods from where they were grown to the various distribution points to the grocery stores they were sold in. And they found that they were able to drastically increase the speed of just getting that information to where it needed to go within their organization and between organizations. And once there was an outbreak of a foodborne illness like salmonella in lettuce, I think it was, and they were able to track it down to its source, they said in the report, about 95% faster than with the traditional distribution systems that they used. So that's just one use case of major businesses using smart contracts successfully. Blockchain capital raising, or BBOs, come in 3 different flavors. The initial coin offerings are the oldest of the 3. And when you think of coin, think of Bitcoin, because most of these were for cryptocurrencies looking to sell some of their digital coins to raise money for the operations of their company. So the ICOs were the first way to raise money by selling the coins, and they were popular a few years ago. And unlike traditional fundraising, which typically involves the sale of equity, companies conducting an ICO sell their digital asset called a utility token or their cryptocurrency, which pretty much means the same. And it's not associated with any equity in the company itself. You're just buying their digital token. So the next type is security token offerings. So the STOs differ from the ICOs because the offering is for the purchase of a security rather than a digital product. And during an STO, companies offer investors equity, interest, or debt instruments in the form of digital tokens. And finally, the most recent form of capital raising on the blockchain is initial exchange offerings. These have gained significant traction since the laws and regulations around the first 2 became stricter, and they've become more popular since 2019. Companies conducting an initial exchange offering sell the utility tokens or securities through an online asset exchange and relies on these exchanges to act as counterparties and manage the issuance of their tokens. So this was just born out of regulatory backlash from the SEC and other global regulatory agencies to be more in compliant with laws about capital raising. So if you're thinking about raising money for an expansion of your business and there is an aspect that you can digitalize, right? If you can sell a piece of your business digitally. So obviously, if you're creating a currency, that's quite simple. People are buying a currency and they're kind of investing in the idea that they like it for whatever reason. Maybe they want to disrupt the traditional banking system, so they want to invest in Bitcoin or invest in Ethereum. But these are the 3 main ways that companies are raising blockchain capital today. Fourth, you can bring new customers to your small business by accepting cryptocurrency. So a survey of 35,000 cryptocurrency holders last year showed that about 60% had spent between $100,000 and $10,000 in cryptocurrency to buy goods or services. And only 12% purchased anything worth more than $10,000. So those might have been the folks who went out and purchased a Tesla. But you can see that if you're looking to sell a good or service in the range of $100,000 to $10,000, there's a large amount of people out there who are looking to spend their cryptocurrency on that. Most people, over 75%, have expressed a willingness to spend their digital assets, and 14% said they prefer holding for investment. And 9.5% said the issue of them not being able to spend the cryptocurrency that they have is because there's a lack of stores accepting cryptocurrency payments. And so the question was asked, what would encourage you as digital currency users to spend more? And the answer was if more places accepted cryptocurrency. So I think it shows that there is more demand to spend this than there is supply to accept this. And that leads to an opportunity. If you want to be more tech savvy than your competitors, if you want to offer new customers a way to buy your services because they have cryptocurrency, or you prefer to save money on those transaction fees, these are some of the ways and the reasons why you'd want to consider accepting cryptocurrency payments. So what is next for blockchain, right? If we look towards the future, a lot of technologies fail and disappear 5 or 10 years after they're launched. Is blockchain going to follow that? Well, of course, I don't know for sure, but I'm going to try to figure out an answer based on what we know. So after blockchain started in the 90s, many legal and technological challenges were overcome to enable blockchain services on a wide scale that we see today. And this is evident in the fact that by 2017, major businesses like IBM, Visa, and Delta were using the blockchain in their finances, operations, and logistics. Also, more people started acquiring Bitcoin and other cryptocurrencies and looking for ways to spend them on goods and services. This is about the time Tesla started accepting it. Small businesses adopt cryptocurrency more starting in 2018. And they start using initial coin offerings for capital raising. And at around this time, future-looking businesses start building services on blockchain and accepting payments in Bitcoin and other cryptocurrencies. So you don't have to be a giant corporation to figure out a way to utilize smart contracts to save money and speed up your processes. It's also quite easy to integrate payments of Bitcoin and cryptocurrencies. So these are things that any small business can be looking into today, and many have already started. So in the future, the way I see it going is widespread adoptance and acceptance. So governments will start issuing cryptocurrencies to supplement or replace their national currency. There have been some interesting and exciting developments in this area. China has already issued a digital yuan, which is their national currency, running on the blockchain. They've announced plans to have it replace their traditional banking system currency in the future sometime. The US government has started a research study to study how the US would create a digital US dollar along the same lines. So, governments are going there. This is going to change the regulations and make it easier for businesses to use it, but it doesn't mean you can't start today. And I think traditional banks will slowly be displaced by blockchain-based financial systems for the reasons mentioned above and the benefits that blockchain brings. And ultimately, large and small businesses that have failed to adopt any kind of blockchain technology will lose their sales out to blockchain-powered businesses. Whether or not people want to spend it and they are going to pass you by if you don't accept a cryptocurrency, or businesses are using smart contracts and other blockchain tools to automate, streamline their businesses and operations and finance. So is it important for small businesses and entrepreneurs to keep an eye on blockchain? Absolutely. Is it critical that you jump on this right now? Maybe. And I think that those are some of the questions that we'll be happy to answer and try to figure out as a group what direction the industry is taking. So no matter what industry you're in, blockchain is being used. And so it's easy to see how it fits into many different types of businesses, such as the banking sector and transportation, software development, global currency and ease of payments, operations for large and small businesses, speeding up the communication and lowering costs, the transportation networks, enabling remote work, anything to do with ownership of records of property, cars, houses, that kind of thing, automating supply chains and making that more transparent, healthcare records and digital healthcare records stored on the blockchain, and even experiments with blockchain-based voting. Estonia, I believe, is the country that has a couple of years ago converted their entire national voting infrastructure over to the blockchain. Very interesting. I think other countries will start going the same way when they see how much cheaper and faster that system is compared to the traditional voting systems and mail-in ballots and all of that. Safety and privacy concerns are a big question, and I get asked this a lot. How secure is blockchain? How secure is Bitcoin? What are those safety and privacy concerns? So obviously, it's a big topic. It deserves several hours on its own. Here I'm going to cover what I believe are the top 4 concerns, just to be aware of. First one is what's called the 51% attack. So as I mentioned, the nodes in the blockchain validate transactions, and you need a majority, so over 50%. So a 51% attack means that transactions can be reversed and cause double spend if you can gain a majority control of the blockchain's hash rate, which is the power of its nodes. So think of it this way. If you want to rewrite information and say you have all the Bitcoin in the world, what you need to do is control 51% of the nodes in the Bitcoin network, and you can make up any data you want. This is incredibly hard to do. Many people say impossible. And as of 2018, only $20 million was lost due to this issue that was recorded out of $500 billion. So it has happened on a small scale, but that's what a 51% attack is. Second is social engineering. So this isn't exclusive to blockchain or Bitcoin. This is common in any kind of digital security where someone obtains your private keys or passwords, your login information, and they often will do this by imitating someone you trust in an email or a message or a social media account, and basically ask you for something personal like a password, and then use it to swipe your money. It could be digital money or it could be traditional money. So it's necessary to make sure you never send anyone your login credentials, or if in Bitcoin and blockchain, your private keys. The next security vulnerability are third-party vendors. So I mentioned up above BitPay and Coinbase as two vendors who offer you cryptocurrency payments on your website. They could fall into this bucket of third-party vendors. It's not uncommon for vendors to have a limited focus on security with even weak internal security controls of their own systems. So if you are going through Coinbase and they're handling your Bitcoin transactions for your business, and Coinbase gets hacked, as has happened in the past, that exposes their users' information and money to the hackers. So this can happen because of flawed code or personnel vulnerabilities that would ultimately expose these credentials to unauthorized users. So what do you do about this? Well, there's not a lot you can do. Even the biggest banks and some of the biggest corporations have been hacked over the years, and things have been stolen. You can research the company, its track record for security breaches, data hacks. If there's a company that seems untrustworthy or not taking their security seriously, then I wouldn't use them. But it is a risk that you can't totally avoid today. Fourth is poorly tested code. So as Bitcoin evolves and new technologies enter the market, developers and companies are incentivized to be the first with an early release of their application. And often they deploy these programs and these services with insufficient testing on live blockchains, which can lead to vulnerabilities that hackers would be able to exploit. And also, this isn't unique to blockchain, because if you think of the Windows operating system, even today, Windows 10, they're still finding bugs and exploits. And Microsoft, hasn't been able to make it 100% secure. Same with Mac OS. So any kind of code has the chance of having a vulnerability. But with blockchain being such an evolving technology, very rapidly evolving, people are really rushing stuff out, and you see that a lot. So, take your time, do your research. Obviously, if you're not a developer, you can't test their code for vulnerabilities, but you can read reviews and do as much due diligence as possible. Well, thank you. That concludes the formal presentation. We're now going to have some time, I think 30 or 40 minutes for your questions, and we'll open it up to all the panelists. But if anybody's not going to stick around for that, thank you for your time today. I hope you found this helpful and informative. And my email address is here, as well as the email and the contact website for the Virginia SBDC. If you'd like to reach out to me with any questions to talk about your business and blockchain further, feel free to reach out to me. This information will also be emailed out by our administrator after the presentation. Thank you.
All right. Thank you so much, Cameron. And yes, everyone, I will email out the slides and the recording. So we do have a few questions to get our panel started today. Can you pay the rent, mortgage with Bitcoin? Go to the movies, dine out. What does Bitcoin buy?
Well, I'll take a stab at it. You can certainly do any of those things with Bitcoin. It depends if does your landlord accept Bitcoin for your rent? Does the movie theater accept it as a payment? As of now, I'm not aware of any movie theater chains who accept Bitcoin, but there's no reason why they couldn't. I think it's a matter of time before the major movie theater chains will accept Bitcoin, probably 2 or 3 years. But yeah, I think you bring up a great point. as that survey showed, a challenge right now is a lack of merchants accepting cryptocurrency like Bitcoin. So if you're a small business owner, this is, I think, an incentive for you to enable that as a form of payment.
All right, so if blockchain doesn't act as currency, how are assets like stock valued in terms of dollars or euros, perhaps?
I think that the question, I'll jump in on this one. I think that the question is kind of assuming, or it can, I think it gets a little bit confusing because blockchain is really kind of the methodology, right? The underpinning technology. In and of itself, it's not a currency. Like Bitcoin is a variation of blockchain, right? Or utilizes blockchain as part of, what makes it up, right? But in terms of valuing, blockchain itself, I think it, I wouldn't look to valuing the actual blockchain itself, but I would turn to Cameron and Dr. Clack to see if they disagree with me.
No, I wouldn't disagree with all, Beth. I agree. The blockchain is the methodology, and cryptocurrency is built on the back of of the blockchain. And what we see, I'm thinking here like Dogecoin and all that kind of financial speculation, suggests that cryptocurrency is a form of currency, although we can't. There's a debate about its stability given the decentralized nature of the system. So it remains to be seen just how stable will they be.
Yeah, that's great. And it also makes me think of comparing it with Linux, which is another open source operating system. So I almost consider blockchain like Linux. Linux can be used by any company to make a version, and they can monetize that, they can sell that. Just like you can use the blockchain to make your application, for, and you can go sell that and make money. So, what's the value of Linux in dollar terms? I don't think anybody's ever been able to put a dollar value to it. Similar with blockchain, I think.
All right, thanks. I'm going to ask a couple questions here. Where do you think blockchain adoption is with businesses today? Are we still in the early adopter phase and are a ways away from crossing the chasm into the mainstream? Does that make, do you want me to?
Yeah, it makes sense.
Okay.
I want to hear other people's thoughts as well.
I think I'll take a stab at that. It just seems, as Cameron, as you pointed out already, that there's a just growing use in different sectors of the economy of blockchain. So we're just going to just see more of that, and that's just going to accelerate the level of business, and also to a certain extent at the level of like individuals. But like, have we reached mainstream? I guess my first question would be like, okay, what does that mean, mainstream, right? So like, it would be the equivalent of just going to any mom and pop store, any store really. I can just have my choice of payment, Bitcoin or whatever cryptocurrency that may be of the future. But I'm kind of skeptical. I don't think that we're in the mainstream phase just yet. I think that's going to be maybe 5-10 years from now, especially that we're only let's say vis-a-vis, let's say China, right? They already have the digital yuan. And we're just conducting a research study about the digital dollar. And that's a whole separate debate about the digital dollar versus private cryptocurrencies and how they're going to interact in this kind of future financial system. So we can speculate about that if people are interested.
I think, what's crazy to me though, is that while I think that it's not gotten a ton of traction in terms of just percentage of businesses utilizing it, I think there's a lot of movement at the kind of higher levels of the Fortune 500 in a lot of ways, in terms of starting to figure out ways, as Cameron mentioned during his presentation, to utilize it, like Dole, right? Pineapples, and you were talking about, the issues of salmonella, right? And so the idea of like farmers being able to use blockchain in, I don't know, Argentina, and then that information, that blockchain being utilized all the way up the chain at Kroger or Walmart, in some of these larger, because there are now these interesting, to me at least, interesting kind of teaming agreements that are starting to occur, or like joint ventures that are starting to occur around blockchain technology with some of these, major players. You see banks, you see other folks kind of like wading into the space. And so I think that Ford, you see all this, motor companies and things starting to utilize it. So I think the more widespread it becomes in that way, I think it's percolating up through business development teams at some of these larger entities. And I think that people, the average person, would maybe be very surprised at how blockchain technology is starting to impact their daily life in ways that they don't even know just yet. But I do think that in terms of percentage of industry, we haven't seen a whole lot, in terms of it actually trickling down. But I think it's incredibly interesting and exciting. And I think that Cameron's right with regards to his advice to really it being a game changer for small businesses to not only figure out how do I incorporate it into my, software app or something, right? Or how do I utilize it that way, or my business, the blockchain technology itself, but figuring out how do I accept, cryptocurrency as a payment. That's all of a sudden you're unique. Like Cameron's sitting here saying there's a ton of people who want to spend their coins and they don't know how to spend them, right? I'm sitting here because the Bitcoin value is increased and gone up and down, and I'm suddenly a little bit of a Bitcoin millionaire or something. I have nowhere to spend it. Like Tesla's just stopped taking my Bitcoin. I can't go buy a couple of Teslas. So if I'm a small business in Charlottesville, shoot, figure out a way to take that money. That's what I would do. So.
Yeah, that's great. And I also add that, our society is structured with a lot of laws, and the US government from a federal level has been very lax in regulating cryptocurrency and Bitcoin. And I think that's a major reason why more small and medium businesses have not adopted it. It's similar to the hemp industry and legalizing marijuana. And in a lot of states, this is a gray area. States are taking the lead when the federal government is not stepping in. And the state of Wyoming right now has the most progressive cryptocurrency and blockchain laws. It's very exciting. They have politicians there pushing that forward well beyond what the US federal government has come out. And so I think that when the federal government gets on board, figures out what the laws are around that, is when we'll see an explosion in the adoption. The government moves slow, and they've already been thinking about this for several years. So who knows how long it'll take? I don't think the federal government has a big incentive to be fast. In fact, I think they have an incentive to be slow because the banking sector has so much money involved in maintaining their hold, and they have a lot of clout in the government. So I think that's one of the reasons why regulations have been very slow, and why in the last 3 or 4 years, there hasn't been an explosion of businesses accepting crypto. Only those that are willing to go a little bit outside the law, because there's some gray areas here that businesses have to deal with when it comes to accepting.
I think Karen's absolutely right. Just to piggyback on that for a hot second, to say that Delaware and Wyoming are really trying to lead the charge. Delaware did it a few years ago. Wyoming is like, they want to be like the cryptocurrency of the West. They want to be the place to be. Virginia had a law or a proposed legislation that came up last session that died about utilizing, blockchain technology in stock ledgers and things like that in the way that Wyoming and Delaware are. It just didn't get off the ground. But I think that we're going to see it move more and more. I will say the other kind of random footnote to this is, and we saw some questions about SEC, Securities Exchange Commission, percolating, and not to jump any guns on that, but the SEC actually, in terms of setting its 2021 agendas, has left cryptocurrency off of the radar, right? It's not considered something that is regulated by the SEC. To Cameron's point, the federal government is trying to, I think, figure out what the heck is going on, right, in terms of what this is. But it's considered a commodity right now and not considered, something that would be handled by the exchange. And so, anyways, I think we're going to see it continue to bubble up. But that blockchain technology absolutely is being utilized. It's the cryptocurrency, I think, that is component that is a little bit more peculiar. And people are trying to figure that part out.
Thank you. I have one, I think this is a simple one, but I'll add on to it a little bit. Is there a finite number of Bitcoin to be mined? And also, I think maybe expanding, they asked specifically about Bitcoin, but maybe talk about some of the others too, how that works.
Feras, would you like to answer that one first?
Yeah, I'll go. I was thinking about it. Yeah, there is a finite number, and that's how it derives its value. And in that sense, cryptocurrency, this cryptocurrency enthusiasts would point out that unlike, say, fiat currency, which in theory you could unlimited printing, with cryptocurrency, there's a limited number. So in that sense, there's a kind of overlap between cryptocurrency enthusiasts and kind of like gold bug people, the ones, that gold has a high, has an inherent value. And this is why they would argue that, cryptocurrency is inherently more valuable than fiat currency. I mean, and this is tied to larger, political, social, cultural currents like in this country and beyond. So just there's an interesting aspect, the social life of money or cryptocurrency.
Yeah, and back when Bitcoin was proposed as a research paper by a guy or a gal named Satoshi, we don't know who that person even is, they programmed in the algorithm the Genesis block, which was the start, essentially the very beginning of Bitcoin, and in the code is the maximum number that can ever be in existence. So we are approaching that number. We are, as transactions happen and miners mine and add things to the Bitcoin, they're getting paid out of the remaining Bitcoins. And I think there's some calculations that when it will all be mined, and the term mine is used because like gold, there's a finite amount. We don't know how much gold there is, but we do know how much Bitcoin there is because it's in the algorithm. And eventually, it might be 100 years or so, but eventually we will have mined it all. And so it is a limited resource.
Thanks. How is the IRS aware of blockchain transactions?
Because you sign your tax return under the penalty of perjury. So that would be my thought. Or I'm not a tax attorney, and nor do I claim to be. So that's about the extent of my knowledge. But I don't know if Cameron or any others have any other thoughts.
Well, I know that Coinbase.com, which is the largest cryptocurrency exchange in the US, they announced like a year ago that they are willingly submitting information for people who own, at the time, over $10,000 worth of Bitcoin to the IRS. So they were sending the names of those people to the IRS. The IRS basically said, you need to do this or we're going to shut you down. So they did it. And if those people then did not report their cryptocurrency, because the IRS knew about it, the IRS was fining them. So Coinbase plays with the IRS, but however, if you have your Bitcoin in a website other than Coinbase, smaller ones, offshore ones, could be in Asia or Europe, they're not submitting anything to the IRS. So it is really hard for the US government or any governments to tell who owns Bitcoin, who's making money from it. And in essence, that's the reason for it existing. It is decentralized, it is anonymous, and many people who use it don't feel like the government should be snooping into their finances. And that's a major use case. So this is also why the legal aspect is taking so long, because the government, from a technological point of view, can't tell who owns it. And that makes them very nervous, obviously. There's also bad actors like money laundering and things like that happen, organized crime. And so, there's a lot of aspects to consider with that question.
Yeah, I mean, we can basically see a future where those gray zones will be, slowly kind of ironed out, as the government lumbers forward, creating a regulatory environment. So.
Thanks. What are some roadblocks, such as accessibility or education gaps, that need to be addressed towards the mass adoption of cryptocurrency equitably?
Yeah, I think I'll start off first on that. In terms of education, mass adoption, I think what comes to mind is that most people really don't understand what is cryptocurrency, what is blockchain. And if you were to ask them about it, they would probably refer to Dogecoin, financial speculation, Elon Musk, Tesla, kind of hodgepodge of ideas. So there's no a fully formed base. So it would behoove us to kind of create, educational content that's easily accessible and simple for, a wide audience, just to kind of basic, very basic level education. What is cryptocurrency? What is blockchain? And what can you do with it? And then kind of, maybe different outlets of where to proceed from there, right? You can be a miner, you can be a designer, you can be a program, developer, all kinds of stuff.
All right, thanks. Does anyone else want to take a stab at that one? Or I think I'll go on to the next one. Okay, thank you. let's see. This one's a long one. So this relates to international trade and international banking. I know the US government is evaluating cryptocurrency's role, but due to the nature of crypto, how do you resolve the know your customer rules? How do you know you're not having financial transactions with denied parties or sanctions? How do you manage the various requirements to make sure that international trade regulations are met?
I'm not sure if that question is from a small business in Virginia's point of view. It seems like, you know, you maybe have a very big international business, which is fine. I'm happy to take a stab at it.
Yes, it is related to Virginia businesses.
Yeah. Well, so the know your customer regulations, as far as they've been implemented so far in the cryptocurrency, is usually getting a photo ID of somebody and keeping a record of that, you know, a government issued photo ID. Some websites that exchange cryptocurrency will go as far as having you write a note and take a photo of you holding a note with today's date and your name and signing it. So they, because the laws are still being developed to make sure that, you know, there's no money laundering or organized crime happening with cryptocurrency, the ways that people implement these know your customer regulations are a bit loose and they vary, and it's evolving. You know, it's evolving like nothing we've probably seen in our lifetimes as far as what is this challenge like to regulate, because blockchain is really unlike anything that most of us have ever encountered, especially lawmakers and policymakers.
I'll also throw in that the US Treasury Department put out some regulations in October of 2020 related to Bitcoin or cryptocurrency payments arising out of ransomware events, right? Where you have organized criminals who are out there, you know, you saw it in the news this last weekend, you see it Colonial Pipeline, you know, people making payments using cryptocurrency as a part of being held essentially hostage during a ransomware event, their business being held hostage. And the US Treasury Department said, you know, that essentially are put a warning shot, if you will, out there to insurance carriers, to businesses, and to law firms, and anyone that would facilitate a ransomware payment, which is always going to be in a cryptocurrency form, to a sanctioned entity, right? So, and to a kind of like to essentially some offshoot of, you know, Iran or North Korea, right? The idea that you are supporting you know, a sanctioned entity. So I think you have to be very careful, especially if you're using Bitcoin and paying a ransom in a cybersecurity type event, right? And, you know, those are events that, you know, I think it's very different to use cryptocurrency to go buy a Tesla, right? Because we know who we're dealing with. Or go down, you know, on the downtown mall in Charlottesville, and I want to use my, you know, my Coinbase, you know, wallet or whatever to go make a payment and buy something from a great small business in Charlottesville, right? I think that's different than kind of like making a payment as part of what is in theory a crime, right? Or is a crime, a ransomware event. So, you know, to Cameron's point, I think know your customer KYC is continuing to evolve. I think that it is spotty. I think it's going to continue to be spotty until one of these regulating entities in the United States starts jumping in and starts making some moves. So that would be my thoughts.
Thank you. For small businesses, is there a fundamental difference at the point of sale in a needed business decision to accept Bitcoin versus Ethereum versus Dogecoin, et cetera?
From the small business's point of view, there's various ways to accept any of those cryptocurrencies. The most common way is now with a debit card that would be like a Bitcoin debit card. So essentially there's many services out there that will allow you to preload like $1,000 US onto a debit card. And then you will have, you know, X amount of Bitcoin. So then if your merchant accepts Bitcoin, you can swipe it in their point of sale system and the transaction happens. So they're basically these third-party intermediaries. So that's not ideal because there's additional fees there, an additional layer of complexity. Like you have to reload your balance of your Bitcoin debit card with US dollars, and then there's a bank transfer. So it's not ideal, but that's currently the most widely accepted way I've heard of. The most efficient way though, is when you are just able to pay directly from a Bitcoin wallet, your wallet to the merchant's wallet. And then you pay almost, you know, zero fees. You're in the situation where your fees are kept very minimal. But that hasn't gained widespread adoptance yet that I've seen. it basically would take an app or just a user interface to enable you to, identify the recipient's wallet, digital wallet address, and the amount, and click go. But a lot of people, I feel like that's just over the horizon for most businesses and customers.
All right, thanks. If we start accepting Bitcoin as payment with depreciating US dollar and getting hit by the IRS at EOI, how does this benefit small companies trying to implement blockchain? I think this was a follow-on from another question, actually. Hold on, maybe that's, I don't know if anyone wants to try to take a stab at that. I'm looking at, it might be out of context.
Well, it brings up an interesting question that if the US dollar value fluctuates, Bitcoin is independent of that. And so it could be a good store of value. I mean, assuming, let's just say hypothetically, the stock market goes down 20% in the next 6 months, Bitcoin might go up, it might stay the same. Right? It's a separate store of value, and a lot of people see it that way. But I guess I won't go too much into the theory of investing or speculating in cryptocurrencies, because that's not the point of this meeting. This is more for small businesses using it.
I have another one kind of going back to the supply chain tracking example. In regards to the example of supply chain tracking the source of salmonella 95% faster, does blockchain replace an RFID tracking solution, or would it work with an RFID existing supply chain tracking solution? So does it integrate into an existing one, or does it replace it?
I don't know. I don't recall the details of if they were using RFIDs in that scenario and in that report that I read. So I don't know, but on the surface, you basically just barcode a shipment of produce, and then you have people along the way scanning that barcode, and that's recording the information into the blockchain. So I don't know if that's using RFIDs. I don't think that would be. It's just basically using some sort of a barcode scanning system. That information then is automatically entered into the public ledger, which, the reason for that is if you have distributors, you have grocery store managers, whatever, they can get access to that information. Whoever you want to have access can get that right away. And so in that sense, it's a transparent method of tracking this. And in their case, it helped them to backtrack it from the point of outbreak of disease to where it had come from, so they could prevent more from getting out of that same place until it was fixed.
There's also some interesting articles, if you are, I found this whole thing fascinating, but if you want to geek out on this, you can really look at like Dole's website, for instance. I think they have some kind of like white papers put up about what they're doing. There's some interesting things out there on this particular front. So anyways, just throwing that in.
This one's do platforms automatically convert the coin price compared to the US dollar when purchasing from a business? So I'm guessing if you make a purchase, does it automatically convert it in relation to US dollars?
So let's just say you're using Coinbase's e-commerce plugin of the blockchain. If you're selling something for $100 and that purchase is made by Bitcoin, they're going to look at the price that second, that conversion rate, because it changes every second minutely, and then they'll convert it to cryptocurrency based on the market rate. And so it's pretty well established at this point what that conversion rate is.
Thanks. Is blockchain good for low price and profit margin sales like an $11 product? If you were selling sort of low sort of dollar products, would it be good for that?
So I don't see any reason why it wouldn't be. Think of your different fee structure. If you're selling a $10 thing with cash, they give you a $10 bill, you're not paying any fees, right? You're paying taxes, but you're not paying fees. If you do a credit card transaction for the $10, you're paying 3% at least. If you're doing a cryptocurrency transaction, it will be somewhere in between those two. It's not a $10 cash with 0 fees, and it's also not 3% fees with a credit card. It's like maybe 0.1% fees, and that fee is what's called the gas fee. And it's a strange term, but the gas fee is basically how transactions get recorded, and that is paid to the miners who run the nodes. So they need to be paid for their, energy use and all that stuff, and that's where that little fee goes. It goes to the network of miners.
And one other little footnote to this, or kind of a component of this, is to that question about the margins and the in some ways the fluctuation, right, of the various cryptocurrency and how it can emerge and evolve. One thing I'll note is that lawyers are grappling with this in regards to receiving fee payments in cryptocurrencies, right? And so actually there are a lot of ethics rules popping up across the states related to whether or not a lawyer can actually receive a cryptocurrency payment from a client. The reason being the fact that the client, when you pay me in Bitcoin, you may think that it's only worth, let's say, $10,000, pick a number. But immediately, all of a sudden, because the market does fluctuate, all of a sudden you pay me with one coin that's now worth $50,000, right, dollars versus $10,000. And so is that fair to you as the client as you're paying me for what you think the services may be, right? And so states are it's interesting to watch how states are kind of splitting on this front. There isn't a uniform, lawyer ethics are very state specific. There isn't a uniform global ethics for lawyers. So for instance, in Nebraska, you actually have to immediately take the cryptocurrency upon receipt as a lawyer and turn it to regular currency, right? Like, so immediately. So I can't hold on to it and be like, ooh, I'm going to see what the market does, right? In places like New York, I'm not allowed to take it, right? And in DC, I'm allowed to, or it's not unethical in DC, but it is in New York. And North Carolina is saying if you disclose it, then maybe it's okay. But again, I have to do a lot of rigmarole if you're going to pay me in this to be like, do you understand that this is something that fluctuates based on the market and blah, 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 blah. So anyways, I think that's kind of interesting. And I know that's not directly what the question asked, but a little random factoid about this kind of the way that the market can fluctuate. I think you as a business owner could benefit from that fluctuation, especially, based on the current environment and the way that these things can move, but they do move, right? So that's something to keep in mind if you're going to take cryptocurrency as a payment and you're worried about margins.
Thank you. Can you explain how the 51% of nodes was achieved to result in the 20 million industry loss? Do you see that repeating? Can we talk a little bit more about the 51%?
The 20 million that I quoted wasn't just one incident. I think that was just numerous incidents that had been reported in the year 2018, which is the most recent data I could get on that. So how is that achieved? Well, first off, it's never been achieved on Bitcoin. Bitcoin is the world's largest cryptocurrency by market cap. And what that means is that there are tons of nodes and miners. So to control 51% of that base of nodes is, most people think, impossible. So what's happened is smaller cryptocurrencies with much smaller market caps and a smaller number of nodes have been hacked with the 51%. It's not really a hack in the traditional sense. You might have, the way it would happen is you would have somebody with a warehouse full of computers, and they would turn them on all at once, and they would boost their power above 50%. They would gain 51%, and it just needs to be briefly. And then they would be able to enter fraudulent data into the blockchain, right? So it doesn't mean they have to have 51% for weeks and weeks and months and months. I think these hacks have happened when somebody has intentionally calculated how much they need, gone just above 50% to do their malicious activity, and then they drop back off the radar. But I'm not an expert in how those work. That's just my understanding of it. But it's only happened on the smaller cryptocurrencies that probably nobody's even heard of, never Bitcoin.
Bitcoin, you'd have to take over. I mean, you can look up on bitnodes.io the number of current nodes or an approximation of current nodes. So I just did while Cameron was talking, you're talking like over 11,000 nodes. So to get 51% of those various, and those nodes are, and it'll show too, like a heat map of where they are. They're not all in the United States. Some of them are in Russia and Ukraine and Nigeria or whatever, right? So in terms of being able, you're saying you're going to launch a wide scale attack on 51% of 11,000 servers, computers of various security metrics, right? And that's how you're going to try to do this. So I think to Cameron's point, smaller currencies, easier to accomplish. Bitcoin probably, again, I say this and tonight there'll be some attack, but Bitcoin probably pretty safe. So.
Thank you. If we are interested in learning more about cryptocurrency, are there good resources that you all would recommend? Or what are your favorites? Or you can think about it if you want to also share in the chat or something, you could do that.
Well, I think it's a great question, and that's why I like this selection of panelists, because we have the academia side, we have legal, and my approach is kind of from the small business entrepreneurial side, but there are information resources in all these areas, because there's not one centralized body that is in charge, obviously, or producing the best literature on this. So a lot of good research is coming out of academia, like what Feras is working on. There's a lot of good thought leadership in the legal sector. And so, you know, I pretty much, if I'm looking to learn about what's happening, I will focus on the major publications like BBC, New York Times. They do good research. And the problem is there's a lot of cryptocurrency news outlets, which are very they're not professional. And a lot of them will have stories and talk about things based on trying to increase the value of a cryptocurrency because they're going to profit from it. And there's dozens of these shady news sites, you know, that have popped up. So my opinion is focus on only reports from big established news outlets that are going to do much better research because they have a reputation. These other news outlets that talk about cryptocurrency 10 times a day, every little thing, they don't have a reputation. A lot just disappear because they're only there for basically to change public opinion in one way or another to make somebody profit.
Yeah, it's interesting to speak to that. Is that I agree with Cameron, obviously, that if you're going to do your research, look at mainstream media. But then at least when I was conducting my research, I noticed that for some people, they're more likely to pay attention to the kind of the shady websites because one, they were cryptocurrency enthusiasts, so it's kind of, let's think of it as a true believer, and a distrust of just mainstream media, like, oh, mainstream media is only saying this because they're against cryptocurrency. So it was kind of like an interesting counterintuitive perspective, and that they're more likely to be cheated, unfortunately.
I mean, I also liked, personally, because again, maybe I'm just a major nerd. I liked reading like the bitcoin.org, the papers that Cameron was talking about from the Bitcoin's kind of mysterious founder and, kind of invested, if you're interested in this topic, I think that's a kind of subset that needs to be like a Netflix, miniseries, because there is a lot of mystery surrounding who the originator of Bitcoin was, and it talks a lot about blockchain technology and things like that. So, in terms of historical Bitcoin blockchain type stuff, I just go to bitcoin.org because they do have the original paper that kind of launched the 1,000 chips, if you will. So that's what I would do.
Thanks. This one is kind of asking for clarification on blockchain technology and contracts are being used to track activity, but the actual payment is in dollars. Is that correct? I'm wondering if this is where maybe some clarification between cryptocurrency and then blockchain technology. You could still have a blockchain technology and maybe use dollars as the payment. Could someone talk about that a little further?
So I think this is talking about smart contracts, which I am passionate about as the lawyer in the room. So maybe I'll jump in if that's okay, and then pass the baton over to Cameron on this one and Dr. Klenk. But I think, the concept of blockchain-based contracting is really that the code is going to have the legal terms, right? That there's going to be certain provisions in the coding that are then triggered. And I think that's to your point, right? Or the questioner's point, that the dollar figure could be part of the blockchain coding, if you will, that's part of the smart contract, right? It doesn't have to be that we're making a payment in Bitcoin. The blockchain technology that's making the smart contract can talk about dollars, right? It doesn't need to be crypto specific, right? Because again, blockchain itself is the technology or the coding, if you will, to get really simplified. And these guys are going to beat me up about that. But that is to talk about what it is that's making this up. But I do think that you can use dollars with using blockchain technology, right? You can use dollars. It doesn't have to be a cryptocurrency as a part of that. I do think that smart contracts, there's a whole lot of like, oh, it's going to replace lawyers. I still think that it's going to be, you can't get rid of us lawyers. We're like cockroaches, right? We're going to survive. But, insert your bad lawyer joke. But, I think that no matter if it's written in code or written on a Adobe PDF or, written on a piece of paper on a napkin, whatever, the terms of the contract have to be analyzed and determine what they mean, right, in a court of law or generally. And so I still think that it's going to be that lawyers are going to be involved, and we may become involved, technology lawyers like me, become involved in helping you write that blockchain smart contract, right, to make sure that you do get the payment that you need. It's just going to be a different method of contracting. So I hope that answers the question a little bit, but passing to Cameron too.
Yeah, I would love for some law firms to be at the forefront of writing legal smart contracts, because there's two sides to it. There's the development side. You need a competent developer who knows C#. That's not hard. And then you need the legal expert who can translate what the client wants and make sure it's a legally binding contract. So yeah, I think those two pieces of the puzzle, and I'd love to see them come together more often to help businesses just start jumping on the bandwagon here. But yeah, there's no reason that I know of that you couldn't just transact a smart contract with US dollars or any currency. It's more elegant to keep it in the cryptocurrency ecosystem. And the reason is because if your smart contract is running on a blockchain, and right now, the blockchain that's most popular is Ethereum blockchain. It's not the only blockchain you can run a smart contract on, but it's the biggest. So you could have your smart contract run on Ethereum. You could then have payment happen in Ether, which is a cryptocurrency in its own right. And that's a very elegant solution. It keeps it all within the same technology stack. It's very easy to program that. And there's little ways that it can go wrong. If you then want your payment to happen in US dollars, you've got to tie that into a bank, two banks, your bank and their bank. You have to use those banks' APIs to program withdraw funds automatically, deposit of funds automatically. That gets a lot more complicated. And especially because those banks like to change their APIs quite a bit, like once or twice a year. So you might have something working fine that breaks because those banks change their code and now you've got to update your code. But keeping it in the ecosystem of Ethereum is elegant, it's simple, and there's less ways that it can break ultimately.
Thank you. So this person currently uses Coinbase on a personal level, but curious as to how to access blockchain technology for their business. Like, how do you log in and utilize the blockchain? So they're already a little familiar, but how would you do it as a business?
Great question. So in the email you'll be receiving after this is my presentation. On slide number 11, if you click on the Coinbase logo, it takes you to that website, but I'll just tell you right now, it's commerce.coinbase.com. And that will allow your business, and I've already done this, I've tested this out, it's really easy. It allows your business to integrate the major cryptocurrency payments right on your checkout page, running through Coinbase. And they'll help you to deposit the US dollars into your bank account. So it does everything you would need. So commerce.coinbase.com. I think in the US, it's probably the best solution right now. It's not the only one. Another one is BitPay. So again, yeah, you can find those links in my presentation that'll be emailed to you.
Thank you. I did have one more quick question kind of in that same vein. Sort of from a small business kind of, how is accounting taken into consideration with dealing with accepting cryptocurrency? Like, how would you put that into an existing kind of accounting system if you're already kind of using, US dollars? Or
I don't think we have a professional accountant here, but and they might give you better advice. Yeah. But from my research, the services offered by Coinbase and BitPay integrate with QuickBooks, which means they're going to record your payments in cryptocurrency automatically into your QuickBooks ledger. So that should make it very easy for you to reconcile your taxes and all that stuff. That's about as far as my knowledge goes on that topic.
Thank you. I want to go back to what are the advantages of smart contracts? I know you all kind of talked about that a little bit. Is there anything else that any of you would like to add on that about the advantages of smart contracts? Anything else?
Well, they've got a lot of use cases, but I think the landscape is ripe for somebody to really make good use of them. Limited number of organizations have used them, but the technology is sound and can offer a lot of speed and cost savings. So, you know, if you were somebody who could, you know, wanted to invest some time and money to try to dominate a certain industry by kind of revolutionizing it using smart contracts, I think that's where the opportunity lies right now. So yeah, I mean, there's a lot of options and things to talk about there. But.
Sorry, go ahead.
No, go ahead, please.
No, I mean, it's just a minor point. It goes back to education about cryptocurrency and blockchain. Like a lot of this terminology, people don't know, like what's a smart contract? Like, and is it, you know, is it illegal? Is that the same as a legal category or not? You know, very like basic stuff. So I agree with Cameron, like it's ripe if someone just takes advantage.
Again, though, as the lawyer in the room, I would say anytime you try to write a contract on your own, you are, you know, you're all brilliant people in your own, you know, in your own industries. But I see a lot of brilliant people put things into contracts that then they think is very clear and it's not clear later. And so I think that the same kind of problems can arise in a smart contract that could arise in a regular contract, right? I mean, you think it's clear. And it's still potentially not clear. Now, I will say that in the smart contracting, in theory, it's triggering certain things. You know, if I do this, then this happens, right? And it's just really coding. But I still think that you're going to have potential issues. So I would still consult with somebody if you decide to start building your own smart contract. The other thing I'll say, though, is that I do think that there's, you know, some of these big companies are flirting with this a little bit without calling it a smart contract. So like you see BMW and others putting out like car birth certificates, right? Or the idea, you know, some of this, you know, the car title, if you will, that's kind of immutable. And, you know, I think that whether we call it a smart contract or not, I think the technology is being utilized in some of these kind of ways, right? Where you're getting a confirmation, it's in the ledger, it's clear, allegedly, certain things may be happening or triggering other events. So anyways, but I just, you know, I think it's fun to have a smart contract. I think I would recommend trying it. I think it's ripe, as the other panelists say, but as the lawyer in the room, again, perhaps trying to protect my brethren and sisters out there, you know, just consult with one of us before you go down that path in a major contract. So
nuance and ambiguity matter.
That's right. Please don't.
I think that's great advice. And also, you know, it's those big Fortune 500 companies who have the legal expertise who are doing this, and the smaller and medium-sized ones aren't, because yeah, they don't have the legal people to help figure this stuff out, and it's a new technology, so they don't have that as much resources to invest in it as does, you know, BMW or some car company. And I also think it's a bit of a lack of imagination from startups, entrepreneurs. I think that there's a lot of ways that this can be used to disrupt different industries, and for, you know, whatever reason, I feel like there's just a lack of imagination and creativity right now with people trying to do that. So yeah, it's mostly the bigger companies, but I think smart contracts will trickle down to the rest of the business, you know, ecosystem eventually.
Thanks. I do have a couple here that maybe are related to entrepreneurial sort of questions. So I have one, am I able to, I don't really have a lot of context. Am I able to sell my utility tokens without getting in trouble with the SEC? I don't know if that's one that can be, I'm thinking maybe they are starting their own business or something. Does anyone have any insight on that?
Again, I think, I mean, I defer to the other panelists here, but as I understand it, the SEC is like, we're not dealing with this because, you know, they view this as a commodity and not as, you know, a security. And so I think that, you know, but I'm not trying to give anybody legal advice on that. You know, you should consult with a lawyer directly in the confines of the attorney-client privilege on those fronts. But I don't think that you're flirting with danger there just because the SEC is kind of hands off. But you know, again, pass the mic to my fellow panelists.
Yeah, I don't have a deep basis for answering the legal questions. I know that some law firms are working more with cryptocurrency and cash capital raises using it. Cooley comes to mind as a nationwide legal firm that I worked with their DC office a couple times, and they have people who do really nothing but capital raises with cryptocurrency, with utility tokens, with ICOs, and all these other types I mentioned. But yeah, I would proceed with caution, because there's definitely been stories and reports of companies raising millions, tens of millions, even hundreds of millions of dollars, only to be fined and sued by the SEC and put out of business. And I don't know what happens to all that money, but nothing good. So I would definitely, consult the right legal people.
Thanks. Anyone else have anything to add? This is probably similar answer, but I'm just going to put it out there. This is really more individual too, so this might just be short. Who can I speak to about launching an ICO in the US for a blockchain health LED token smart contract that runs on Ethereum via IPFS and ENS? The roadmap and white paper have been completed. I think, is this another, maybe talk to a, yeah.
Sure, sounds like it. Find an expert. Could not answer that.
Right. That's right.
All right. I have a few more. So this one's kind of interesting. With influential people like Elon Musk, how can small businesses protect themselves from whales who are shaking the crypto market, with pump and dumps, I guess. So, I guess for those who are kind of wary about adopting it, what are some things you can do to protect yourself?
Well, the main thing, you can't stop speculation on any of these, but if you're accepting it and you want to mitigate your risk, you need to convert it to US dollars as soon as possible, because then you know what the value will be, up, within a percent. But if you wait a month or 6 months, it's definitely going to be different. You don't know if it's going to be up or down. So that's more risk the longer you hold it.
Mm-hmm. Mm-hmm.
All right, thank you. I think we kind of touched on this earlier, but I just, does it make sense for any small businesses to accept any cryptocurrencies other than Bitcoin?
In my mind, yes, absolutely. And I'm looking at the Coinbase website, because Coinbase supports the leading cryptocurrencies, which is only a handful. And I'm trying to find the list of them right now, which I'm not finding real quickly, but Bitcoin, Ethereum, Dogecoin, or 3 of the top probably 10. So yes, you want to support a broad range of cryptocurrencies. Bitcoin, you can look at the market caps, and that gives you a general idea of which ones are used the most widely held. So it's usually Bitcoin and Ethereum are the top 2, and then the other positions change over time. So yeah, and if you use Coinbase or BitPay, they don't just lock you into using Bitcoin. They give your buyers the option of picking from any of these leading cryptocurrencies that they support. So that's it. I just support whatever they support, and you'll have pretty well covered there.
Yeah. So in that kind of same line, how expensive is it to adopt? Would it be for, are there some kind of fees or anything?
So yeah, Coinbase charges no fees for this service. So it's close to 0%. I can't say it's exactly 0%, because I think you do end up paying the gas fee, which is very low, like 0.1%. But you can set up your account and start with Coinbase for free, and BitPay charges 1%. So that's what you'll pay. And there's no like sign up fees or startup fees with these companies, just a percentage like that.
All right. I think this one will go through quickly, but I'm going to ask it because I think you have some experience with this, Cameron. So how could blockchain be beneficial to nonprofits?
Well, yeah, so about 3 years ago, I created a blockchain cryptocurrency for the nonprofit sector called NGO Coin. And the use case was nonprofits who were sending money overseas to support humanitarian programs. pay a lot of money in fees, up to 4%, and it takes sometimes a week to get money to a field office. So using a cryptocurrency, they could pay almost zero fees and it could get there within a few minutes. So this was a pilot. I built the company and I ran a pilot. And due to the regulatory landscape at the time, we ended up having to pause operations. So nonprofits are looking into ways to use cryptocurrency in a couple of main use cases. One would be virtual identities. So with displaced people in refugee camps, they lose their ID cards, right? They show up and they don't have a pass, they don't have passports, and there's millions of these people in the world. So there have been a few blockchain programs that issue virtual identity cards on the blockchain, which then stay with the refugee from camp to camp to camp. If they're finally resettled into a country, has a record of everything. It even has a record, obviously their basic information like name, birth date, place where they were born. Also, it keeps track of stuff like if they're issued $100 to spend on food and water in a refugee camp, like what they bought with it. So it's a whole record of everything that's being kept on the blockchain. So that one and the use case of lower fees when transferring money around the world to support programs are the two main use cases that I've come across.
All right. Thank you. I have a couple more. This one, I'm not exactly sure entirely what they're asking, but maybe you might understand. What does the transaction look like? What is the data? I think if, I guess, how would maybe a business see what the transaction looks like? Or sort of what data do you see in a transaction? I'm not sure. It's maybe.
Well, yeah, so I showed an example of blockchain.com, which shows the real-time, activity of the Bitcoin ledger. So that's basically it. That's called a blockchain explorer, and you can find that for any of the blockchains to show you the current history. And if you made a purchase and you knew your key, your public key, you would see it show up there with all the rest. So that is how you would see a transaction happen, yours or anybody else's.
All right, thank you. And I think I have one more. Is one of the fundamental reasons of creating blockchain to replicate or replace a supply chain? I think we talked about supply chains a little bit, so.
No, I don't think so. I mean, I think it's more along the lines of like just adding efficiencies to the supply chain, right? And adding the ability to navigate, like if you're dealing, especially at the Fortune 210 level, if you're dealing with a global network of vendors and suppliers, and using our pineapple example again, the idea of like trying to figure out how do we trace that pineapple back to the farm, and did it get salmonella or whatever awful thing, those kind of, I think it's not to replicate or replace necessarily the chain itself, but to kind of add a lot of immediate efficiency, as Cameron was talking about with his nonprofit, and cryptocurrency, the idea of like quickly being able to figure something out versus having to wade through various software programs or information or data or people to be able to figure something out. The idea that the ledger is available rapidly, I think is what is the use of it. But again, I look to the other panelists if they have anything else to add.
Yeah, one of the small business owners that I interviewed in the course of my research, I agree with you, Beth, right? This is not about replicating or displacing a supply chain. Like it's about creating efficiencies. So he was looking to integrate, I can't remember the exact details, but like tracking, like RFID tracking with his product. I think it was like designer jeans, something along these lines. And just to kind of increase the speed of that, but also as anti-fraud as well. So if someone were to claim, this was X whatever quality of jeans, it would be proved on the blockchain. So those two things at once.
All right, great. Well, thank you. And I think we are out of time for the day, but thank all of you panelists for everything. And I'm going to turn it back over to Deandra to close everything out.
Yeah, thank you guys so much. We really appreciate it. Thank you, Amanda, for asking questions and helping us out with that. We actually got through all the questions, which was awesome. And we were right up against the end. So we will post this on our website, so you guys will have access to the recordings. You also receive an evaluation and the slides in an email and a follow-up email. If you'd like to sign up for upcoming webinars or access recorded webinars, go to virginiasbdc.org/training. Like I said in the beginning, we've got a couple upcoming digital webinars, so please check our page for that. On our website, you can also access the COVID Business Recovery Center, which we developed to help owners not only continue business operations, but to thrive and recover. These resources are designed to be used in collaboration with your local SBDC advisors. I don't think we mentioned it, but Cameron is available to meet with y'all. He does counseling. He is our digital expert. We also have other experts. So please email us help@virginiasbdc.org, or you can sign up at our website as well. Thank you everyone so much. We really appreciate it for spending all this time with us, and we hope to see everyone at the next session. And thank you to our panelists again.
Thanks, everybody. Thanks to the panelists. Thanks to the moderators. Hope you all have a great day.
Have a great day, everyone.
Thank you.
Bye-bye.